Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we are looking for an impulsive structure to the downside in a wave C, and then an expanding flat 3 waves in A, 3 waves in B, and then a wave C to the downside. The most common target area for wave C is between the two 1.618. One is pulled from the low of A to the high of B with the normal Fibonacci retracement tool, and the other one is taken with the trend-based Fib from the high to the low of A to the high of wave B. Toggle on the two 1.618, and your most common target is between 23.4k and 22k, which also is in confluence with one of my blue target boxes over here, which is nice, sitting between 21.8k and 22.6k. Now, what we do have to remember is that in this scenario, wave B by itself is also an expanding flat and then an ABC. And this wave 4, if the pivot over here is the high of wave B and the end of the impulsive structure to the upside, this wave 4 is very long in time compared to this much smaller wave 2. This wave 4 is around 11 times longer in time compared to this wave 2, which is very rare, and therefore in the probabilities, we have to keep that in mind. Now, in the bullish scenario, however, the pivots at the moment, I've also put them over here at the same place for then this to be a first structure to the upside. And in a second, I'll explain why the A and wave 1 are not over here, but now here on the pivot on the right. But in this more bullish scenario, we are expecting another move towards the downside in then a WXY correction. So we have a wave A, B, C, a zigzag in wave W, where wave C retraced to the 0.618, which is a rare target for a wave C, and then a 535 wave move. In wave X, we are then currently looking for an expanding flat structure in an ABC, where an interesting target is the 0.5, as it is in confluence with the triple top, as well as a resistance area that is sitting around that triple top all the way till 30.6k. And we shouldn't forget the 0.786 is still a target for a wave X. It is higher than the most common target for a wave C, in this being an ABC, but still we do have a target over here. The extended, more rare target of a wave C is around this area. So the 786 in confluence with this resistance area between 31.1k and 31.3k is at least one that we have to keep in mind as well. After which we then expect another move to the downside in then a 3-wave structure for a wave Y, as a WXY is a 3, 3, and then another 3-wave move to the downside, where then we are looking for lower targets for support, and one of these targets is between 27.4k and 26.8k. Now, the reason that I moved the pivot to the right side and made this the high at the moment is actually because of the lows that we have over here, where this low got taken. Because if we make this a 5-wave move to the upside like this, and this is then the high of wave 1 or wave A, we are looking at a corrective structure, right? Either in a WXY or an ABC. But if this is an ABC, we're then looking for a 3, 3, and then a 5-wave move to the downside, meaning this structure is then a wave C. But if this is a wave C, we're looking for a 1, 2, 3, 4, 5. And that is an impulsive structure to the downside. The problem is that the low of wave 1 hit the high of wave 4, which invalidates a regular impulse for then a 1, 2, 3, 4 overlap with 1, and then eventually a wave 5 to the downside. That's not what you want to see. The other option is that you have a diagonal in a wave C, so then it is a 1, 2, 3, 4, 5, and then eventually you have a diagonal to the downside, but then it is an ending diagonal, and an ending diagonal, because it is wave C, which ends the ABC structure. An ending diagonal should always be zigzags, so each wave should be a 3-wave structure for then eventually a zigzag contracting diagonal like this. However, this is clearly not a zigzag structure to the downside. The first zigzag structure is this one over here, and if we are then looking for another zigzag up to make this a wave 1, 2, and then eventually 3, 4, 5 in a diagonal like this, well, the problem now is that this is not a zigzag on the lower time frames, but we already took the low, meaning that this low over here cannot be the low of a zigzag structure in an ABC, because then B took the low of A. That's not allowed. So therefore an ABC is kind of the cards. And if we look at a WXY scenario, then inside this Y we're looking for a 3-wave structure, Most commonly in a wave Y, and kind of following the rules, in a wave Y you want to either see a zigzag to the downside that is a 535 like this, you want to see a flat in an ABC, which clearly we didn't have, or you want to see a triangle, which is also something we cannot see. So the only scenario is then an ABC and a 535, but that would then mean that this is the low of then an A, B and a wave C, and from here you then want to see an impulsive structure to the upside, but then again you're not allowed to take this low. But that is what price did. So that is the reason, just because of this low over here, that is the main reason why now the pivots that I have on the chart in the medium time frame scenarios are over here at the moment instead of the high on the left. Now, if we look at the volume profile on the medium time frame, this is a volume profile. Let me go to the daily of this range over here. And you can see we are now testing the value area high. We broke out. We're now here looking for a back test for then continuation to the upside. It's important to hold this level if you want to look for higher prices. It could be nice to hold it first time, right, in potentially a WXY scenario, but then move to the downside, reach around this point of control or lower to the support areas that we have over here. Point of control at 27.9k and the value area low of this range at 26.2k are important targets if price can find respect inside this area. And for me, respect basically means going inside the area, then again backtesting the value area high for then a continuation to the downside. Now also I found this earlier today where we have a support resistance, which is actually quite interesting over here, which can now act as support. It's a bit different than the value area high, but it's around the same level. Over here, resistance, eventually a bit of support, resistance, broken, and now potentially testing as support. Now, as you can also see, we haven't yet hit it actually, but if price would move to the downside, this is an important area, and this support area is between 28k and 28.5k. If we then zoom in just a little bit, you can see we also have a support resistance area above price, which acted as a very nice resistance indeed. Support for like over a week time, broken, backtested at resistance once more, twice, for then a push to the downside. Simple support resistance flip. Now, if this one gets broken, we could be looking to enter this value area over here, enter the value area low, again for then a move to the upside. We have the triple top around the point of control. That's an interesting level, and we can break out of the value area high to reach the higher levels around 31k as well. Now, if we go to the lower time frame scenarios, then this is the expanding flat scenario where we are then looking for a three-wave structure, right? We then have a W to the downside on a medium time frame in a zigzag, and then in wave X we're looking for an A, B, and then a wave C to the upside, where the most common target for wave B is between the 1.236 and the 1.38, which is pulled from the low of A to the high of wave A, which, as you can see, has now been tagged twice. Now, the first time was potentially a scam wick type of move, because this was a wick on the 1 minute, literally like 2 seconds, and it moved back towards the upside. So this one is more realistic in my opinion. I wouldn't mind going down once more to test this area instead of wicking like this, but more like candles closing on top before a move to the upside. So that's still something to look for in case price is not finding the the power to look for more upside immediately, because usually a wave C is quite a quick move towards the upside as it is an impulse. Now, if we look for the target area of a wave C, again, the 1.618, where the lower is between, it's between 29.9k, this one, and the higher one is at 30.4k, which is very close to the triple top. And the 2.618 is a rare target, and the 3.618 is a very rare target for a wave C. Now, in between the 2.618 and the 3.618, we have the 31k resistance, which is still an area to look for. However, the main resistance area first is going to be this area over here. Preferably, we also have a little bit of resistance over here in the middle of the target area between 30k and 31.1k. But the triple top is so interesting because there must be some incredible liquidity resting above these highs, triggering the stop losses. Maybe people market buying because they think we go up, but then instead filling the shorts for a move to the downside. How amazing would that be indeed? I also like to say that if we go to the Bybit chart for a second, then you can see there is no scam wick actually on this chart compared to my Coinbase chart. But over here, we were talking about it in the previous video that it would be nice for the Bybit chart to also hit the common target area for a wave B, which it has now done. Now, as you can see, it's a big wick once again. It's not like price found support over here and then moved to the upside. So that remains to be seen, but at least we have hit this area, which for me is important. If we then go to the second scenario that I have, which is the more bearish scenario, then in this scenario, we are looking for an impulse to the downside. So in this scenario, we are looking for a double 1-2 setup. 1-2 1-2 for then this to be the beginning of a wave 3. Now usually after a double 1-2 you want to see a big 3 to the downside, so actually this one is maybe a little bit disappointing. Then we have a wave 4 and eventually a wave 5. Now if we look at this wave 4, then on the 15-minute this high over here is on the edge of invalidating a wave 4, because a wide wave 4 and then a 1 2 3 4 and eventually a wave 5. If we take a fib from the high to the non-scam wick over here, or we could pull it to the scam wick, but important is the 0.5. And for the 0.5 to not be broken, we have to move it to like this level. But as you can see, both of the wicks on either side are below this level. So yeah, doesn't look too great and would kind of maybe invalidate a wave 4. It's just difficult to manage because of the scam wick. But most importantly, this double 1-2 is an expanding structure, and preferably you have a contracting structure to the downside in a double 1-2, like a 1-2 1-2, and then a bigger move to the downside, which should be very impulsive. But we have been ranging here for a very long time already, which doesn't really suit a very impulsive wave 3 to the downside. So at least that's something to keep in mind. We do have bearish CVD divergences over here that already played out. That was nice. Price over here going down, wicking this low, played out very nice. And now when price moved towards the upside, we still have bearish divergences like this. However, I do prefer to look at CVD divergences on the right side of a new low or a new high. So yes, we do have bearish CVD divs over here, which I can show you on the AGGR chart. The template can be found in Discord as well. But here, lower high on price, higher high on the CVD, as you can see. But it's the second time that this, actually the third time, that this now is a bearish CVD. The first time was these highs, lower high on price, higher high on the CVD, played out. Second time was with this bounce over here. We had a lower high on price, higher high on the CVD, but also with this high, lower high, but a higher high. That was a second CVD, as I like to call it. The first one over here played out, highest probability of playing out. The second one has a little bit lower probability, but played out as well. And also it was a more local bearish CVD divergence. But now this one, another move to the upside, another bearish CVD. That's the third time with this high over here, this pivot. And the more times it happens, the less the probabilities become of it actually playing out. Now, if we zoom into the 3-minute or maybe the 1-minute, there are no bullish CVD divergences with the low here at the moment. So we have to keep observing what is happening more locally. And what I prefer to see, which also then leads me to the probabilities, what I prefer to see on the lower time frame, which is where we are right now, is basically a CVD scenario. So preferably, as explained in my previous video, we are finding support at the wave B target area, so the Fibonacci area over here. Maybe price can come down once more and find support here before moving up. That's absolutely fine, but that is the preferred scenario based on my analysis of the range that I've done in the previous video. But what I would like to see to give extra confidence to the Elliott Wave scenario is to see a little bit of a range towards the upside, like a bit of waves towards the upside on the 15-minute, before then a retracement, some bullish CVD divergences, and then that gives more confidence for a continuation to the upside, even though the preferred scenario from an Elliott Wave point of view with the analysis we've done in the previous video, make sure to check that one out. It's about 10 minutes. Preferred upside it is. Of course, it can go up immediately, even though we don't have necessarily bullish CVDs just yet. And on the medium time frame, if I then zoom out to the medium time frame, then currently the probabilities are still geared towards also the bullish scenario, where we are looking for eventually another move towards the downside before then continuation to the upside, in this move being a 1 or A, looking for 2 or B, and then eventually either a wave 3 to the upside or a wave C to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.